time on discussing some practical questions where we can have a one-on-one interaction. And I would like you all to be participative in that. So I'll briefly discuss rectification of errors. So as we know that we are doing, there is an accounting cycle, right? So you prepare journal entries. From journal entries, you take it to ledger. And from ledger, you prepare a trial balance. And along when we are doing all of this, we are considering that we are following the double entry accounting. So the dual aspect of every transaction must be served whenever there is a recording of transaction. How do we ensure that? There are different ways of ensuring that, but one of the ways is that the debit balance and the credit balance of the trial balance must be equal. And that is the first indication that there is an arithmetical accuracy or in the books of account. So that is the first thing that we gain by looking at or by witnessing that the debit side and the credit side of the trial balance are equal. But the second implication of equating the debit side and the credit side of the trial balance is that the double entry aspect of accounting or of recording all the transactions has been served. So we have not made any sort of wrong recording of an accounting transaction, and all the transactions have been recorded accurately. So that is if the balances are not equal, that means if the debit side and the credit side of the trial balance are not equal, there is an indication that there is some sort of error. If there is an error, that error needs to be corrected, and that whole process of correcting the error, revising the mistakes which we might have made, and recording the transactions is known as rectification of errors. So what is rectification of errors? Rectification of errors is a process or is a procedure which is carried out in order to establish that there is arithmetical accuracy in the books of accounts. The double aspect of recording all the transactions has been served, and the transactions have been recorded accurately, and thus the balance of the trial balance is matched. So errors can be, so for that we need to understand what do we mean by an error. We know that there is an error when the debit side is not matching with the credit side. That's a time when we will say that there is an error. But what do we mean by error? We mean by error is what do we mean by error? Error can be unintentional omission, you missed something, or you unintentionally committed a mistake. That's what an error is. If it is intentional, then it is not an error, it's a fraud. So errors are always unintentional. Unintentionally, some transaction has been missed, or unintentionally a wrong amount or a wrong account has been treated. So once an error is detected, what is required? The requirement is of rectification. We must correct the error that has been made. The rectification of error should always be done in a systematic manner. You should not overwrite or should not cut it or should not paste on the place of error. Well, that used to be happen in past times when the accounts or the books of accounts were made manually. Nowadays, the books of accounts are not made manually, so there is no chance of overwriting or cutting or pasting. But yet, there is a procedure that must be followed. In order to operate on software as well, we must understand how the errors need to be rectified. Well, the classification of errors, what are the different types of errors that we need to rectify? The errors can be classified in 4 different categories. One is error of omission, error of commission, error of principal, and compensating errors. What do we mean by error of omission? You missed something, that is error of omission. There was a business transaction that was not recorded altogether, that was recorded partially, that is error of omission. You didn't record it in journal or subsidiary books. These errors are hard to be discovered because you've missed the transaction altogether. What is transaction? Transaction is economic reality of business. You missed to record the reality. The business is not going to notice that until and unless there is an audit, right? So goods, for example, because they won't affect the trial balance because both the aspects, the debit as well as the credit aspect, both the aspects have not been recorded. So goods purchased from Narendra Kumar was not recorded anywhere in the accounts book. That is an error of omission. Such an error is termed as an error of omission because the transaction has not been recorded. There is no trace that this transaction has happened. How a business comes to know that this transaction has happened? Only through if it has been recorded. If it has not been recorded, it will not come to the notice of business. It will not get reflected in the trial balance, and thus it is an error of omission. And the next one is errors of commission. Errors of commission means you committed a mistake. There is a mistake that has been committed. Now, committing a mistake can happen on different dimensions. Like you can wrongly post transactions, you can total them wrongly, you can balance the wrong balance of account, or wrong casting of subsidiary books. You were supposed to record in one book, you recorded in another one. Wrong recording of amount in the books of original entry. So these are generally clerical in nature because they're mistakes. They are done when you were making initial entry in the books of account. Such errors also happen in when you're recording on a software. Okay, you are not recording in a hardbound book of lead journal to record the transaction. Most of these errors affect the trial balance. An example of this is goods purchased 20,000 on credit are recorded in the purchase book rupees 10,000, right? This transaction should have been recorded in purchase book with an amount of rupees 20,000. But what have been done? It has been recorded with an amount of 10,000. What's the error here? Error here, you should have recorded it with 20,000, but you recorded it with 10,000. Now what happens? The total of sales book will be carried forward as 5,000 instead of, the second one is carried forward as 5,000 instead of 500. So the both of these transactions indicate that there is some sort of wrong entry made right at the time of recording of the transaction. In second case, wrong amount is carried forward from one accounting period to another one and from one end of the page to the beginning of another page. This is also referred to as error of carrying forward. So in the next category of uh, error is error of principle. What is this? Error arising from incorrect classification of receipts and payments between revenue and capital receipts and revenue and capital expenditure are known as error of principles, which result, what is the implication? The basic principle that we discussed in capital receipts and capital expenditure and revenue expenditure was it is essential to distinguish between capital expenditure and revenue expenditure. Okay, can anyone give me an answer to this question? Why do we need to make a distinction between a capital expenditure and a revenue expenditure? Yes, my question is, why do we need to distinguish between a capital expenditure and a revenue expenditure? I'll write this question in the chat box itself. Okay, now tell me, why do we need to distinguish? Because of matching the EA, very good. Rightly identified. Anyone else? Kirandeep, can you unmute yourself and tell me how would you explain this matching concept? This is right. The answer is correct. But I want you to elaborate on this. We need to match the current year's revenue with the current year expenditure. That's what the matching concept states. So why do we need to do that? Because we want to identify what is the exactly. You very rightly said, Vineet, we want to know what is the current year profit or loss. And that would help us in identify. If we are not doing that correctly, then that means we are either overstating the profits or understating them. Overstating and understating profits has an indirect implication that we are overstating or understating the assets and liabilities. So that's the main reason why we need to distinguish between revenue and capital expenditure. Now let's go back to what we were discussing, that if you don't recognize, if this error of principle happens, the implication of error of principle is it will lead to understatement or overstatement of income, assets, and liabilities, because it will disturb the matching concept. Okay. So, for example, wages paid for construction of building debited to wages account. Construction of building. This was a capital expense. This should have been capitalized. Capitalizing this means this should have been added to the value of an asset and should have been indicated as part of an asset, and would have been written off over a period of time. Now we have reached that matching concept, and it has been debited to wages account. In this scenario, what has happened? We have recognized this as a revenue expenditure and have debited it to wages account. This will give me an answer whether this will lead to overstatement or understatement of of uh, of your profit. Overstatement or understatement of profit. What do you think? It will lead to overstatement or understatement of profit. Yes, it will lead to understatement of profit. Very rightly said. Now let's move on to the next one. Excuse me. Amount spent on repair of machinery debited to machinery account. What will happen in this case? The amount spent on repair is a revenue expenditure rather than capital expenditure. It should have been debited to repairs account, but it has been wrongly debited to machinery account. The same thing that has happening here. So that is the error of principle. Now the next is compensating errors. What do we mean by compensating errors? When two or more errors are committed in such a way that the net effect of these errors are debits and credits is nil or nullified, these errors are known as compensating.